After the US Central Bank decided to slash the federal funds rate, the Bank of England assembled for its policy meeting the next day. The Monetary Policy Committee kept the key interest rate unchanged, so investors realized that policymakers were revising their viewpoints. Indeed, favor members now advocate for another rate cut. It means that the British regulator is putting further monetary easing on the pause button. Earlier, the ECB already ventured into a few rate cuts. Besides, the European regulator dropped a hint that the next rate cut in the Eurozone would happen in the distant future. At the same time, the Federal Reserve is at the beginning of a monetary easing cycle. In other words, new rate cuts will follow only in the United States. In the meantime, European central banks are likely to put interest rates on a hold. For this reason, the US dollar has been losing ground across the board. The greenback is expected to extend its weakness for a few months. On the chart for the euro-dollar pair, we see that the euro has recovered almost in a full after a recent downward correction. At the present, the euro-dollar pair is hovering at around a local high of the uptrend channel. If the instrument settles above 1.1150, it indicates bullish sentiment among traders. However, the resistance area between 1.1200 and 1.1280 serves as an obstacle in the path of the buyers. The upper border matches a high of the medium-term uptrend. To reinforce a further bullish trend, the price has to overcome this level. Otherwise, it could turn into the new resistance. On the oil market yesterday, Saudi Arabia finally responded to the hostilities not only in Lebanon but also in Palestine. Crown Prince Mohammed bin Salman stated that diplomatic relations between Saudi Arabia and Israel are off the table without the establishment of an independent Palestinian state. Such statements clearly point to the increasing tension in the world's main oil-producing region, which is naturally driving up crude oil prices. The oil market is pricing in the threat of supply disruptions due to the potential military clashes. In this context, oil prices are trading higher. Brent futures are now following an uptrend, and the Brent price has already jumped by another 1.5%. All in all, the Brent benchmark has rallied by more than 8% since the beginning of the correction cycle. According to the theory of a correction, the price may move in the direction of the resistance level of $76. The yuan ruble pair stabilized after the surge that occurred on Wednesday morning. However, the ruble remains slightly weaker than at the start of the week. The yuan ruble pair is moving above the key level of 13 rubles, indicating a prevalent bullish sentiment among market participants. However, to confirm buyers' trends, the instrument has to settle about this level by the end of the week. Otherwise, the price is expected to return to the range of 12.5 to 13 rubles. For your reference, the ruble weakened due to the imbalance and shortage of yuan in the market caused by public holidays in China on a Monday and Tuesday. As the market recovers, the ruble will likely return to its previous levels, where it may trade for some time. The Russian currency has previously got stuck within the same range for weeks, and currently there are no signs that the ruble will shift significantly in either direction. So that's all for now. We wish you profitable trades and a great weekend. Well, we'll see you back on our channel with new videos on a Monday. Bye.